Hello, everybody. Welcome to Tuesday live stream. We got a little bit to go over, so let's just jump right into it and get into a little Q&A. So first of all, as we all know, it's kind of impressive to me that Bitcoin is actually holding the line and not collapsing with all the geopolitical risks that are going on right now. And today was no different. I mean, we had a nice fat low on February 28th of 63,000. Now we're somewhere around the 67, 68 range. Let me refresh this. Maybe it's gone down. No, 68,402. It's been holding out pretty well over the last 7 days. 24 hours, though, we're down not even a percentage point, which I got to tell you is pretty stable for Bitcoin, as you all know, because you've all have been here for 1, 2, 3, or maybe even 4 cycles. What is interesting, though, is that we see precious metals start to take a little bit of a tumble. Over 3 days, silver is down almost 11%. Now, in 24 hours, it's a little bit different. Let me refresh this. For some reason, APMEX always makes me refresh. But yeah, over 24 hours or so, wow, 7%. It's kind of weird. And then gold, I think I take that back. 3.8% over the last 24 hours. Interesting. And over 3 days, wow, 4.5%. What about a week? No, about a month. Okay, well, congratulations, gold holders. I mean, it's kind of holding steady, but it is interesting that precious metals are going down, yet Bitcoin is holding its own. But that's not what we're talking about today. The story today, and I wanted to put this out there, was I called it the end of HODL. And we see that Bitcoin miners are selling. Now, this isn't new. Bitcoin miners, that's what they do. They have to keep the lights on and they sell. But I've seen a shift in the last 6 months to a year or so, where we've seen some top Bitcoin miners such as Marathon, have just decided, you know what, we're going to sell some more. Now, this was the filing of recent end of Q4 2024, or 2025, I'm sorry, December 31st, year ending 2025. It looks like they sold around $413 million. Again, not very surprising. This is what Bitcoin miners do. They have to do these things. They mine Bitcoin. They keep the network stable. They are the backbone of the Bitcoin network. And of course, they're going to have to sell some things just to pay off employees and pay for the upgrades and so on and so forth. But what it really is the shift of the strategy. And we can see it coming. We've talked about this before, but I think it's more of a bigger shift coming down the pipe. Here's what we have. Bitcoin miner Mara says it may sell Bitcoin holdings and strategy shifts. Again, not surprising, but again, the strategy. Firm sold, like 413 million worth of Bitcoin last year. Its new strategy might have it offloading even more this year. So be prepared. We told you, 2026 was going to be one of those years. We felt like Q4 was going to be the top. I didn't expect it to be October 6th, but hey, here we are. 2026 is a midterm year, historically speaking. Every midterm year is pretty bad, not just for crypto, but also for traditional markets. And I think it's even going to get worse. So historically, this is a statement from Mara, we held the Bitcoin we produced as a long-term investment. In the second half of 2025, we made a strategic change to our Bitcoin investment approach and opted to sell a portion, just a portion, of the Bitcoin produced from our mining operations to fund ongoing operating expenses, makes sense, and continue to sell Bitcoin through the year end. In 2026, we are further revised the strategy to allow for the sale of Bitcoin held on our balance sheet in addition to current production. While Bitcoin mining remains the foundation of our platform, we have expanded our footprint in energy generation, and are investing in research and development to establish a presence in AI and adjacent markets. Interesting, because now we've known that Bitcoin miners will pivot and they will sell either electricity or space in their mining operations to make way for chips, for processing speed, for cloud software, for cloud hardware and everything else. Because like, hey, we got to keep the lights on and we're here to be profitable. Now, it's just interesting that they're going adjacent AI and adjacent markets. So maybe that could be more cloud, maybe that could be more compute, whatever else it is. Creating additional revenue opportunities over the long term. So what they're saying here is in 2026, if they really would be like, you know what, Bitcoin is it, that's it, it's all we're going to go to, they're hedging their bet. And there's nothing wrong with that. That is a business, that's what businesses do. Now it's up for you to decide, is this what you want to do? Do you want to hedge your bet? Do you want to invest in something else? Do you want to sell off some things, just saying? Or do you want to hold tight in diamond hands? I can't tell you what to do. I'm not an investment advisor. I'm just telling you what some of the top Bitcoin miners are doing. And I can see this trend continuing into 2026. Now, I could be wrong. And remember, what they're selling, 413 million, it's kind of a pittance to what they actually have. This is Bitcoin treasuries over at BitBo. BitBo, not BitBoy, BitBo.io. And you can see that MARA, or Marathon Digital Holdings, is only second place as far as public companies that hold the most amount of Bitcoin at 52,850. Today's value is 3.64 billion. So yes, they did sell 413 million, but they got a boatload more of Bitcoin in the reserve. Now, will they accelerate that selling? Looks like they may be. But this is just what is happening. I don't see a total collapse. I'm just letting you know what things are going. So let me know what you think about that in the comments section. And speaking of AI, just like Mara has pivoted to AI, so is Circle. Circle is doing a very smart thing. This is Jeremy Allaire, the CEO of Circle, or what you know as USDC stablecoin. And he came out and said, hey, great news. Circle Nano Payments is now available for testing and integration for AI agents and developers. Smart guy. He realizes that there's a narrative out there. That narrative is that AI agents are going to need to make payments if they truly want to be an extension of the user. And because of that, USDC is now making nano payments, send 0.000001, pay zero gas, power AI agents. Now, this is just for a limited time. They are going to have to keep the lights on themselves, but I think this is a very smart pivot moving into AI. Now, there is this example, which I do like, because this is the future, I think, of AI agents paying off different things without you having to do every single thing and every type of transaction for your agent that you're going to create in the future. That's good. This I don't see as that great. Now, hear me out. OpenClaw API integration is live in the Crypto.com app. People look at this and go, this is awesome. I'm going to be doing a bunch of trades now. I'm going to be an awesome trader, and I'm going to make a bunch of money. And guess what? You might. But I can just tell you from experience, trying to use OpenClaw, integrating everything that's actually trying to do, and try to keep safe in the system is very difficult. Also, there's a reason why Crypto.com is promoting this. It is because the more that you trade, the more they get in fees. I hate to break this to you, but also Crypto.com is a company that needs to make revenue. So if you want to go for this, that's great. I think it's kind of like the middle of the road. I'm not really excited about it, but it is playing on the narrative that Jeremy Allaire is doing, but I just don't really know if I like this prospect. Anyhow, let me know what you think about that in the comments section. And then speaking more of AI, I have to applaud some good things going on. This is Nikita Bear, not for sure. Hope I said his name right. But he is the head of product at X, what was called Twitter. And he still is the advisor at Solana, which I'm very surprised that we haven't seen a comment or something else that is going on with Solana and payments, which was promised to us a couple of weeks ago by Elon Musk. I'm getting ahead of myself, but it is interesting. The head of product at X is also an advisor at Solana, and they started talking about payments. I'm just saying. Anyhow, this is the good news. Nikita says, today we're revising our creator revenue sharing policies to maintain authenticity of content on timeline. During times of war or military operations, it is critical that people have access to authentic info on the ground. With today's AI tech, it is trivial to create content that can mislead people. Starting now, users who post AI-generated videos of armed conflict without adding a disclosure that was made with AI will be suspended from creator revenue for 90 days. Continued effects will lead to permanent banning. I support that. That is exactly what it is. If you've perused or taken a look at X lately, it is nothing but wartime. It is nothing but wars. I'm just going to tell you right now, stay away from X. It is a cesspool, and it is very awful. Addicting, but also awful. And if you want to get away from these types of things that's going on in your X post, if you go over here and see where it says for you, and then you can click on following and subscribe. I got free Roger Bear, Ethical Crypto. If you just go to like following, it can pretty much like purge your whole like timeline. Because I'm following a bunch of people that is mostly for like animal shelters and like health and healthcare stuff like chemists and that. If you want to get away from that, still use X, definitely go ahead. But I applaud Nikita for doing that. That is great news. And also, as a reminder, you can use Grok to kind of disseminate this information. Here's a prime example. I'm perusing down X, taking a look at it, kind of got off the beaten trail. And I see this post, No Limit Alpha. It's got about 10,000 likes and a couple million views. Iran has officially declared jihad against the United States and Israel. This is not political rhetoric. This is a religious war declaration. Every Shia militant or militia across Iraq, Syria, Lebanon, and Yemen now has theological authorization to attack U.S. and Israeli targets. Hezbollah, Houthi, Iraqi PMF, all activated under one fatwa. The document calls on the entire Islamic world to mobilize. A political war can be negotiated, a holy war cannot. So I'm reading this and I'm just thinking to myself, man, this is really outside of my sphere of control. It makes me quite anxious to read these things. Here we go again. However, if you just click on that little icon there for Grok to explain this post, it'll give you a reality check, which I have to appreciate. So this is from Grok. This appears to be an overhyped, scare-mongering rather than groundbreaking escalation to an irreversible holy war. Really, tell me more. Fatwas are non-binding religious opinions issued by scholars or authorities. They are not equivalent to state declarations of war. Only Iran's political military leadership, Supreme Leader President IRGC, can commit the nation to actual armed conflict. Similar calls have been issued periodically by Iranian clerics or allied figures in response to Israeli actions, U.S. presidents, or regional strikes. And I'm like, oh, that's right. Make those like every couple of years. So I know what's going on in Iran. Awful, difficult times. Moment of silence for the poor 6 soldiers that were eliminated or killed on the United States side. Having said all that, it is good to keep your wits about you and using AI for what it's important or intended to do, which is to help you stay sane. So here's a little trick. There's a little bit of information out there that you definitely should take a look at. And then lastly, speaking of the war and how it's going to kind of intersect with markets and where we are all at in digital assets, this is going to cause a bunch of inflation, potentially. So insurance companies are canceling war risk coverage for vessels in the Gulf as the widening Iran conflict continues. And I said, this is actually from Reuters. Insurance companies are canceling the war risk coverage for vessels in the Gulf as the widening Iran conflict disrupted shipping, leaving at least 5 tankers damaged, 2 personnel killed, around 150 ships stranded around the Strait of Hormuz. I think hopefully I said that right. This is what's going on. Oil tankers come under attack. Experts fear for global trade. The Strait of Hormuz, where the heck is that? It's right here, as a matter of fact. Let's zoom out. So that's the world, essentially. Africa, Europe, Saudi Arabia, Middle East right there. Strait of Hormuz, or Strait of Hormuz, I'm sorry, is right here, which essentially is the powerhouse for all the production of oil. You got Kuwait, Bahrain, Qatar, UAE. And of course, that strait allows that to get out to the rest of the world. Now, the problem there is if Iran is shutting that down and attacking ships and doing all these things, this is very difficult. So if you're a ship owner or a company that is trying to export the produce that is oil, you don't want to go through that, especially if you've got all the insurance companies saying, hey, guess what? Thanks for paying us, but we're not going to insure you. And that's exactly what's going on. I said, so imagine that you're a shipping company, you pay these insurance companies premiums every single month to insure your ships when and or if the war breaks out. Now the war is broken out, they say, sorry, but we can't insure you. Thanks for all the free money. I know people say that's a very simplistic way to look at it. Hey, coming from Grok's mouth, it says this: yes, major marine insurers, including Guard and Skuld, have indeed announced the cancellation of war risk coverage for vessels in the Gulf and Iranian waters effective March 5th. Following recent escalations in the Iran conflict, the damage to everything is this follows standard industry practices where war risk policies often include clauses allowing insurers to exclude or cancel coverage in rapidly escalating high-risk zones, even after collecting premiums during lower risk periods. Essentially, the premiums cover the policy up to the point of cancellation. Critics argue leave ship owners exposed. Pretty awful, right? Well, if they don't fix that, guess what's going to happen to the price of oil? It goes up. Guess what happens to the price of all goods and potentially services? They go up because guess what? You got to ship all those things all around the world, and that takes oil. That takes gas. That takes everything that's being pretty much blindsided or binded in the Strait of Hormuz. So what do? We don't do anything. It's outside of our sphere of control. It's pretty much what it is. But here's the good news. US is going to say, okay, insurance, you guys don't want to cover it? We'll cover it. US considering oil tanker insurance support to ease Middle East crude shipments. President Donald Trump will revise a set of policy options on Tuesday, that'd be today, aimed at controlling energy prices during the escalating Middle East conflict, including a proposal for the US government to help oil tankers in the region obtain insurance. Crazy. The insurance company just would have done what they said they're going to do. And according to a Kobeshi letter, restoring access to the Strait of Hormuz is being viewed as vital. So hopefully we don't get massive inflation. That would be pretty much game over, especially in the midterm elections. But that's what we have for today. So look, like today's video, give it a thumbs up, consider subscribing. And we talk about is time sensitive. Now, if you want to stick around, we'll do a little Q&A. I'll answer all your questions to the best of my abilities. Now, promiscuous moose, promiscuous for moose, up to the point of cancellation. Exactly. Inflation rate hikes. Very true. Brussie's always right. Inflation rate hike come back. Meme. We will just turn the money printer on. Yeah, that's what America likes to do. Probably so. I think everybody's waiting for it. M2 money supply and all that stuff. You know what? I mean, that's a good question. Where are we at the M2 global money supply? Does anybody have any idea? I don't. Let's see. Oh, it's right here. So M2 global money supply, that's not just the US, that's everybody else. I know there's a way. Ah, there we go. Oh, look at that. Oh, and the black is the Bitcoin price. Sunday, June 29th. Let me log in here. Hold on. Let me not let you guys see this. No, I didn't show you the password anyhow. 1, 2, 3, 4, 5. Okay. So let's see. M2, global liquidity. All right, that's better. And here we are. So this is, in blue is the global M2 money supply. In black is Bitcoin price. Let's get that out of there for a second. Interesting. So we're not at all-time highs for the global money supply. As of October 1st, we had 103 trillion. It's like they retracted some of that. And now we're at, I take that back. We're still at 103 trillion, but maybe like 103 trillion and 400 billion or something. So yeah, roughly the same thing. What about M2 money supply? Let's steal it from Ben's website. Wow, that's absolutely not surprising. So how long is it? The November. I'm gonna make a wild stab at it. We're probably gonna print like crazy, like Meme talks about. So yeah, I can see that. All right, what else we got? Yeah, Mateo's got a good point. Buy and hold Bitcoin always works. Plan never change. You know, I did like the strategy move with Mara, where they said, you know what, we're going to actually increase our sell-offs. I think that would have been a better choice, maybe Q4 2025. Not so much selling Bitcoin now when it's down 50% or so. Would have probably waited a little bit. I would have bought more, like what Mateo was talking about. But, you know, maybe if they sell now, it's, you know, everybody's got their idea of how low Bitcoin can go. I see it could go below 60, 55, maybe even 50. Anywhere between a 200 and 250 week moving average. Let me know how low you think it can go in the comments and we'll go from there. But imagine that. It's 69,000, 70,000 roughly right now. You've got over 3 billion, 3.58 billion worth in Bitcoin. Now imagine that dropping another 20%. That's pretty huge. So maybe they're onto something. But it is something for them to go, you know what, now we're going to start selling in 2026. You would think they would just be holding on more. I'm not a $1 billion company, so who knows? Yeah, Swiper News says, But global supply includes a lot of yuan, and they were buying gold, not Bitcoin. Yeah, and do you notice what happened? I'm just going to throw out a theory to everybody. It seemed like central banks outside the US were buying a heck of a lot of gold, and so was China. China was buying we allegedly, there has been no audit at Fort Knox here in the United States, but allegedly we own the most gold. And China had been rapidly trying to catch up, not just catch up, but just accumulate a mass amount of gold. And now it seems like there's a little bit of a choking point for China and some of its partners. It seems like not as many people are getting into gold per se. Actually, in my Roth IRA account, I showed this yesterday, gold is my #3 holding as far as like valuation. Not because I dumped a bunch into gold. I just bought it like 4 or 5 years ago. Same thing with silver, and it just appreciated so much. But maybe now that we're doing this little power move here in the US, again, this isn't a geopolitical channel, I'm sorry. I'm even going down this road. But if you have something like that, and people are like, oh, maybe we won't be like BRICS and move to a dollar-backed or a yuan or a renminbi or whatever type of currency backed by gold. Maybe we won't do that. Maybe we'll just all be in the US dollar. And in that case, maybe I should buy a little Bitcoin, or at least keep on it. I don't know. It is interesting how like everything's been, precious metals have had quite a volatile time frame, and Bitcoin's been relatively steady for a lot of negative news. And usually news like this dropped it down the bottom. Maybe I'm way off. Okay. Mojo says, besides inflation, what happens if Warsh, we don't know, is going to be the new Fed Reserve chair as Jerome Powell steps down, I believe, in April. So he'll take that spot in May. What happens if Warsh drops rates to 1% within 18 months? I don't know if he can, because remember, Warsh is just the chair. There's other governors that have to vote, but usually what happens is the way that the chair votes is the way that most of the governors vote. However, there was dissension in this last couple of votes, so who knows? If he drops by 1%, I don't know what the terminal rate is. I think it's 6.25. Correct me in the comments. If he drops to 5.25, I can see it. But to go from 6.25, whatever it is right now, to 1% would be, I don't think anybody would go for that. Well, he said within 18 months. I don't know if we could do that. I think that would spook all the markets because they would say, why is all the rates being cut so much? Is there something wrong? And I can see it go down to like 4.5, 5 maybe. But yeah, we'll see. I think that would be dangerous. But that's why I'm not in the Federal Reserve. Now, Joe Fish, Grok only has data from the web. Sure. I think Mara makes money loaning their Bitcoin to suppress cycle. There are other functions to dilute shareholders to reach the CEO. That's kind of like a lot of companies. Rob, are you more optimistic about ADA after the creation of its stablecoin USDX? No. Not that I'm more impressed, more optimistic because of Midnight and how Charles Hoskinson is working with that team to bring that forward. I think, and if you take a listen to like Ray Dalio, which if you want to be depressed, go ahead and take a listen to Ray Dalio. He'll tell you how the world's going to end and how the United States is going to move out of the superpowers. It's going to be China all the way, and World War III, and Bitcoin is worthless, even though he invests into it. And he says quantum computing is going to be there. And he talks about how Bitcoin is awful because privacy, and everybody can see it, and central banks won't own it because they don't want to have everything out there exposed in the open. And I get it. I think Midnight could be the potential answer there. Because remember, when Midnight, if you're not familiar with this is a separate entity, separate company from Cardano, but they work very closely with Cardano, and you could have an airdrop of Midnight depending on which crypto you own. And it could have been Bitcoin, could have been Cardano, could have been Ethereum, Solana, a whole host of different ones. So what they're going to do is they're going to add that on to all these different cryptos to make it private. But wouldn't that be great? You know what would be great? Is because when someone says, hey, send me 20 bucks in USDC, you send them 20 bucks in USDC, and they look at that wallet and they're like, hey, what the heck? You have $20 billion? You never told me that. but you get the drift. Anybody can see how much you own. That'd be like someone going like, hey, Zelle me some, or PayPal me some, or Venmo me some money. And then they do that and they're like, wow, that's amazing. Meme's got $252 million. You're like, I didn't want you to see that. And that's pretty much how crypto and the wallets go. I mean, except of course people say, well, Zcash and Monero. Yeah. So I like the idea of midnight and then putting that on top of everything so you could just be anonymous and be private. That's pretty cool. Now, as far as like USDX, the stable coin on Cardano, it's too little too late. Should have done that a long time ago and they missed the boat. Sorry. Just take a look at volume. We should do that. So let's see. Stable coin volume on Artemis. Let's see. So here's your stablecoin market share by token. And most of it's Tether. It's 60% Tether. This is February, but mostly it's Tether all the way. I mean, and then in the blue, you got USDC, that's 25%. So USDS, I don't know what that is 2%. USDE, USD1, DAI is only 1.46%. How sad. PayPal is 1.37. BIDL is 0, USD. So like, I mean, I don't even know what the volume is for that. Probably pretty low. Oh, here it is. Hold on. USDX. Yeah, it's not even listed. So either it's so infinitesimal, so small, or I just have bad eyesight. Probably both, but I don't see it here. I did a little search, or maybe just because it's new. But yeah, I'm more excited about midnight. And Peyton, big pay if you're listening. Let's get together for drinks and here in Puerto Rico so you can explain that all to me. Maybe we could talk to the foundation. All right. We'll go to LTAP, my new favorite bar. All right, here we go. So Rusty Bot, never connect your wallet to pages you don't know for sure. Most products have legit links on CardMac. And Rusty Bot's, it's a great point. What he's talking about, if you go to CoinGecko, and like, let's say you want to, I don't know, you're like, what the heck? You have like you want to buy, this isn't even a good idea. Let's take, what the heck is this? Let's take Power Protocol. For some reason, it's 90% down. You're like, I got to buy this for whatever. All right. So this is where you can find the contract address. So when you're searching for it, and I'm going to guess this is on a DEX, which if you go to markets and DEXs, yeah, it's all DEXs. If you go here, it's like Uniswap or Katana or PancakeSwap for some crazy reason, and you're looking for it and you type in Power Protocol, you probably get like 10 of them, and like 8 are scams and they don't do anything. But if you type in this, or if you copy this contract address like so, and then paste it into the DEX, you'll find exactly what you're talking about. Rusty Bot is correct. Good one, Rusty. Good one. That's, I don't know. Sean Ram, if the 200 moving average, daily average, the minimum buying point is 50, the selling point. Let's take a look. So let's take a look at moving averages, shall we? Moving averages. There's two types. There's the simple moving average, which takes it on a continuum all the way through, or you can use exponential moving average, and that just pretty much takes the most recent price action and gives that more weight to it. So what you may notice here, if I blow this up, is that this is the simple moving average. And we're taking a look at, what is this? 200-week simple moving average, right? Because this is going all the way back, 200 weeks previously to this point, right? So if we're doing that, in a simple moving average, we're way below it. But an exponential, it gives more weight to a more recent time frame. This is where more traders do it. If you're more of a long-term person, you kind of take a look at this. So the question then is that a good price to buy Bitcoin? Well, like we talked about before, We're not there yet. Historically speaking, let's take a look at the 250, 300, and 350, just for giggles. And the most recent one where we can see that panned out was the last midterm election year, coincidentally, 2022. And then, of course, plus 4 years, 2026. We can see that at this point, this price level of Bitcoin price of 20,000 was a fine entry point, right? Especially since we went to 120K. But if you would have waited, you could have got it at a little bit like 18,000. Yeah, 19,600. Not a big difference, right? You'd have to wait from June 2022 to November to where the real max pain is. And that takes a lot of patience. Then you break through the 250, the 300, and down to near the 350. So you're looking at anywhere below 18,000. That's a good buying opportunity. But yeah, right here, oh, you know what? Here's another way to look at it. Let's say that we only want to buy below the 200-week moving average. That would be when? June 2022, and we stop at March 2023. Let's take a look at something. I'm curious about this. Let's say for that time frame, only 200 weeks, we bought $10 a day of Bitcoin. When did we start? 14th of June 2022. 14th of June 2022. Let's say we ended at, whatever this is, 16th of March 2023. All right. And we just did equal amounts. What can I tell you? You would have spent 2,760, and the price today, even though we're down, you would have had 9,000 bucks, almost 9,500. That's a 240% increase. And guess what? And you only bought for that small amount of time. But if you would have sold at the top, which good luck, you know, if you would have sold at the top, guess what you would have had? You would have had 522.9% at 17,000. That's just $10 a day. So that's, to answer your question, 200 some moving average is a pretty good time to buy. And I think the reason why it is because a lot of the TA folks, I'm not those guys, they look at that and go, okay, anything below that is cheap, I'm going to buy that. And that just becomes a self-fulfilling prophecy. Whether you believe in 4-year cycle or not, the same thing. Is it a self-fulfilling prophecy? Potentially. It worked out pretty well. Or maybe it's just Binance doing what Binance does, which is manipulate the market. Allegedly. Don't sue me. So from here, the next question is, well, should we sell above 50? It's a good question, actually. So let's wipe all these out. Here's where it gets tricky. Here's the 50-week moving average. So we're below here. We went below that on January 2022, and that was after we topped out in November. So actually, it would be pretty good to sell from 60 as soon as it hits at this point after a blow off top. And then you could have accumulated, but then right here it doesn't really work out. I think this works out reasonably well after a cycle. Let me reset this. Because what about over here? Could this also play into it? Well, it's almost the exact same thing. 6th of October, we're above it, right? But as soon as we start to hit below it, that would have been a perfect time. $104,000. That'd have been pretty good. But again, it gets very jumbled when you try to go back in and jump back out and in and out. Very difficult. So it's a mixed bag, but it just shows you like one indicator you can take a look at. And that's that. Okay. Hope that answered your question. Ryan says, I heard the administration has asked Charles to get back into his Blackhawk and sort out the Strait of Hormuz. Should have done that at the start. Yes, that would be good. Yeah, trainer, I'll see you. Seems better than leaden with over 10% rates. Thanks for all what you do. Have a great day. So here's what I got from USDC. USDCX was actually issued by Circle as a 1-to-1 USDC backed version. The virtual Cardano was a Cardano maker token. So yeah, it's a stable coin and it's minted on, or it's backed by USDC. It's just no one's using it. That's what I think it's coming down to. Just launched late February. Well, wow. Cardano finally does it. Hey, maybe it'll be the biggest thing of all time. Who am I to say? Maybe it's going to be the greatest. Cardano's going to come back. I sure hope so. I mean, I got a nice bag of it, so I'm kind of biased. And that's it. All right, everybody, I think I answered everybody's questions for today. So remember, bear markets are just that. They're there just to see if you can make it through. They're there for essentially accumulation. When we get to more bullish markets, then of course we can watch the rules and move forward. That's it for today. Thanks so much, everybody. See you on the next one. Out here.